Hey guys, how's everyone doing? This is Nick from forexfornoobs.com. Few slides. I hate slides, they're just so boring, aren't they? But we got some slides up. So I hope you guys can hear me okay. I think the audio should be coming through just right. I'd get a warning if it wasn't, so I'm hoping it's all good. So let's get started, guys. So we're going to start off with, what are you going to learn today? Today you're going to learn about trading Forex for a living, obviously, because that's the name of the webinar. So we're going to be talking about, is trading right for you? Because trading isn't right for everyone. No matter what Forex marketers and brokers tell you, Forex isn't right for everyone. So we're going to learn, is Forex right for you? We're going to talk about the reality of trading Forex for a living. We're going to talk about the truth about how much money you can make trading. We're going to talk about setting realistic expectations. We're going to talk about how you can make a living trading Forex, the different paths you can take, all that kind of stuff. And we're going to also be looking at some tools that you can use to improve your trading that will allow you to essentially make a living from your Forex trading. I'm going to be sharing with you those tools towards the end of the webinar, so hang around till the end and I'll share those tools with you. So before we dive into the webinar, just a brief intro into who I am. Sorry guys, I've realized there's a bit. I'm going to quickly fix it. I've been notified there's an issue. Right guys, can you hear me talking now? Should be working now. Sorry about that. I'm going to have to go through it all again. Righto. Let me just quickly fix something here that it's a bit of a spoiler, but no, it's working on that screen. It's working on that screen. Okay. Right. So first I'm gonna quickly just tell you guys who I am for those of you who are interested. I just said this, I'm gonna repeat it because a lot of people ask me about myself when I'm doing these webinars, so I just like to get it out of the way. So my name's Nick Bencino. I've been trading Forex for 17 years. I'm a pure price action trader, so I trade just price action. Around about 12 years ago, I opened forexfornoobs.com. It was the first Forex price action website online, one of the first Forex education websites online, and I've just been around in this industry for ages, especially the Forex education industry, because Forex education didn't really start until like, the mid 2010. So like around about 2005, 2006, I think that's when Baby Pips came out. And my site came out like 2 years later. Anyway, blah, 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 blah. Let's jump into the rules real quick. Just going over some rules. Rule number 1, don't be rude or disruptive. Simple rule, guys. Come on. Don't be rude or disruptive. Rule number 2, keep your questions until the end. I just want to get through a bunch of stuff and then we'll switch to questions. And number 3, do not spam. Don't spam Forex products and stuff like that. Just don't do it. Okay? Easy. Uh, right. So I was just having a brief look at the chat, making sure everything's okay. So what are we going to do today, guys? Today we're going to be talking about how to make a living from Forex trading. This is going to be different from all of my other webinars because normally in my webinars I teach my price action strategy or just, price action lessons or, sometimes I talk about trading psychology. But this is going to be different to all my other webinars. This webinar is not for people who want to get rich quick because when I tell you the truth about Forex, you're going to realize that it's probably not for you. If you want to get rich quick, you may as well leave now. This webinar is for realistic people who have realistic expectations, or it's for people who don't know what realistic expectations are in Forex and want to find out. So I'm going to be talking about realistic expectations. I'm going to be talking about a whole lot of stuff. So when I first started in the Forex industry, when I first started the Forex education industry, not trading Forex, but the Forex education industry, it was a pretty cool business to be in because I had my website and most of the other people teaching Forex online were real traders. And then at some point, the internet marketers moved in. And when the internet marketers moved in, they started making all these false promises, blah, blah, blah. You can have a helicopter, you can have a mansion if you're trading Forex, all this stuff. And they basically started selling dreams. That's what they were doing. They were selling dreams to people who were desperate. And a lot of people got basically conned into getting into Forex because of that. Now, basically what they did is they made it sound easy. That's what they did. And they made it sound like you can make endless piles of money like Scrooge McDuck here, which slides. There we go. Selling dreams. Scrooge McDuck. Like Scrooge McDuck here. Like you could have piles of money, blah, blah, blah. But it's not true, guys. Those are all lies, right? They're lies. That's not how Forex works. Don't get me wrong. Trading is awesome. Trading is awesome. It gives you freedom. It allows you to do what you want to do when you want to do it, depending on how much you're trading, your trading strategy. If you have a kind of hands-off trading strategy, then you have a lot of freedom to do what you want when you want. Especially these days with smartphones, we can all trade from our smartphones. It's not ideal for everyone's strategy. Depending on the strategy you're doing, you can trade from your smartphone. So you have a lot more freedom. Or, these days you have these cool little laptops, the folding ones, blah, blah, blah. Trading gives you a lot of freedom. Trading is a great business to be in. It's really good. And trading is a great way to make money. And long term, yes, you can even get rich. But that's long term. You're not going to do it overnight. And also, you can use the skills you learn as a trader to make money in other businesses, which I'm going to talk about, like trading for other businesses. I'll talk about that a little bit in today's webinar. So in this webinar, I'm going to explain to you how to trade for a living, but I'm also going to explain to you the risks and what you need to do in order to prepare to trade for a living. But first, what I want to do is I want to separate the dreams from the fantasy, because a lot of you have been sold dreams, and I want to teach you about the reality of trading. And when I'm doing this, you might realize that trading's not for you, because when you see what the reality is, you might be like, well, that's not what I got into this for. I got into this to, have a mansion next year or some other absurd thing that you've been promised. Even dreams that aren't as grand might not really be entirely accurate. So I'm going to talk about dreams versus reality, or fantasy versus reality, which you already got a spoiler of that slide, but it's coming up now. So while the next 30 minutes of this webinar might sound a little bleak, just bear with me here, because once I clear away all the bullshit, you're going to see the true awesomeness of trading. And it is awesome. It's a great thing to do, and it's a great skill to have. So let's clear away all the fantasy. And look, to be honest, while trading won't buy you a helicopter and a mansion next year, it might buy you a comfortable life where you don't need to worry about bills. You don't have a boss, and you have the freedom to do what you want when you want. You can travel a lot more, all that kind of stuff. Forex can do that for you if you do it right, and it's going to take some time. Anyway, let's clear away all the fantasy, and I'm going to explain to you the reality of trading. So to do that, I'm going to switch to this. So, fantasy versus reality, guys. I want to make 5K per month. The reality is, if you want to make 5K per month, 5K is just a number I picked, right? Some people say 5K, some people say 3K, some people say 1K. That's just not realistic in Forex. I'm sorry to say. There is no monthly paychecks in Forex. It's just not how trading works. All trading, it just doesn't work like that. You're going to have good months, you're going to have bad months. Some months you might make $5,000. Some months you might lose $5,000. Some months you might make $20,000 and then you might lose $10,000 the next month. So there really is no consistent monthly gain in Forex. There are no weekly paychecks like you would have with a normal job or a monthly paycheck. If you know that you're going to need money next month for a holiday and you're short, you're not going to rely on that. You can't rely on Forex to make that money for you because you might have a really bad month and you might lose money instead of make money. There is no consistency of payment with Forex. You're not going to make X amount every month. Some months you're gonna lose. I lost last month. Wait, what was it last month? Just gonna check the cards real quick. No, this month. I lost this month. And I'm behind this month. And I've been trading for 17 years, but I'm behind this month. And that happens to all traders, not just me. It happens to all traders. I know traders who are professional traders, been doing this for a long time, and they're losing 3-4 months in a row. Now, at the end of the year, hopefully they're going to end up ahead. They're going to end up profitable. But you need to be able to sustain those 2 months in a row, 3 months in a row of losses. Because that's just the reality of trading. Sometimes the market's not going to cooperate with you. Sometimes it's not going to be perfect. Sometimes it's not going to give you what you want. And that's just how this business works. If you're not okay with that, then maybe trading's not for you. You're not going to have a strategy that gives you wins every single week of the year or every single month of the year. Now, you might have a very good year where you win every single month. You might have that. I've had that before. But that's not going to be every year. There are going to be years where you have 2-3 months in a row of losses, and you have to be able to deal with that. So that's one of the realities of trading. Monthly profits fluctuate. You're not always going to have consistent gains every single month, and some months you're actually going to have losses. And yeah, that's just the reality of this business, guys. So if you've been told that you can make a consistent income from Forex, you've probably been lied to, because it's just not reality. Just going to move the chat over here. Cool. So that is one of the things, fantasy versus reality. You're not going to make X amount every month. It's just not how it works. Now, going on from that, it's kind of related, but it's a little bit different. And it's the next one that I hear a lot. I want to make consistent profit. Now, it depends what you mean by consistent. If by consistent you mean every year, then yes, you could potentially do that. If by consistent you mean every month, probably not. If by consistent you mean every week, definitely not. I don't think I've ever seen a trader who had 0 losing weeks in a year. I've never done that. I don't think I've ever seen a trader who's done that. So this kind of relates to what we just talked about, but it's a little bit different because it's not about an X amount of money. It's more about just the fact that you're not going to make profit every single week, every single month. So being a consistently profitable trader does not mean you make profit every week. It does not mean you make profit every month. It means that by the end of the year, you've made profit overall. So consistent profitability, I've used that term myself sometimes when I send out an email. I'll say, help you be a consistently profitable trader. But I'm going to make an effort to stop using that term because I think it's misleading. And I've never really thought about it properly when I used it. But I think it really is misleading to use that term because it just gives people the wrong impression about what trading is. Consistently profitable, you can be consistently profitable year to year, I believe. And with my trading, I have been. But when it comes month to month, maybe there's some insanely good traders out there who pull that off. I doubt it. Week to week, no way. you are going to take some losses some weeks. So you need to be ready, basically, when you're trading Forex. You need to be ready to lose a few weeks in a row. You need to be ready to lose a few months in a row. You need to have that that mentality that it's okay for you to lose 2 months in a row or 3 months in a row, because if you just keep trading, you keep applying your strategy, you're going to come out of the other end of it with a profitable year. You just need to get through those bad months. It might be tough psychologically. It's a huge. It really is tough. Even for me, I've been doing it 17 years, and even for me, it's tough to get through those really crappy months, and especially when you get 2 of them in a row, it's not good. But if you push through it, you're going to come out the other end of it with profit, hopefully, if you do everything right. So that's one of the realities of trading. That's price action for you. That's all trading for you. Toast cuts being a little pissy. But anyway, let's keep going, guys. I want to turn 1K into 100K quickly. I hear this a lot. 1K into 100K or 100 into 10,000 or something like that. Some variation of that. No audio? No, there is audio. I wanted to turn 1K into 100K quickly. Some variation of that. So you can't turn 100 into 100,000 in a year. Not without stupid amounts of risk that is basically gambling, and it's going to catch up to you and you're going to lose all that money anyway. You can't even double your money every month in trading without taking stupid amounts of risk. This is not gambling, this is trading. Trading can give you amazing returns. It can give you really good returns. But there's one fundamental rule that holds true in trading. As long as it's not taken to extremes, there's one fundamental rule that holds true. What you put in is what you get out. If you want to day trade or scalp trade 6 to 8 hours per day, you can make huge returns. In a good year, you might actually make 1,000 into 10,000 or more. It's possible if you're trading a lot per day. But so what does it require? It basically requires almost full-time trading. It also requires you to have a lot of experience, years of experience. If you want to turn 1,000 into 10,000 in a year, you need years of experience. You need great conditions, so it needs to be a good year, a good trading year. And for those of you who want to swing trade 3 hours per week, or you just want to trade 3 hours per week, you want to trade here and there, you're not gonna get those kinds of crazy returns. It's just not realistic. You can't put in 1 hour per week and expect insane returns. You can't even do that with just 3 hours per week. What you get out is what you put in. If you're willing to put a lot of time in and you're trading several hours per day, sure, you can make good returns. You're probably going to require some experience to do that. You're not going to just do it out of nowhere. But generally speaking, you're not going to make those kinds of insane returns that some people promise, 100 into 100,000 in a year. That's just not how trading works. You need to take stupid amounts of risk to do that. Stupid amounts of risk. So in every trade, you have to risk so much that as soon as you get 3 or 4 losing trades in a row, boom, your account's gone. And that's not how real traders trade. Yeah, pending orders are a thing. Of course, you can use pending orders, but still, it's not going to allow you to somehow magically get those insane returns trading just 2 hours a week. It's just not something that can happen. Now, I'm sure a lot of people are going to argue, but just that's the reality of it. I'm just taking a quick look at the chat. Oh, okay, cool. Uh, I'm going to be releasing a podcast, by the way, guys. And in the podcast, I'm going to be talking about, I'm going to be interviewing real traders, and I'm going to be talking about basically real trading, the reality of trading. So this webinar is kind of like a test run for that podcast to see how people take it. And it feels like most people are going okay with it, but there's obviously some angry people who can't accept reality. But we're going to just keep going. Right, so yeah, I won't let the chat distract me. I'm gonna hide that chat there. Ooh, the next one. Next one's a good one. I want bots to make me rich while I sleep. There are so many people selling EAs out there. And this is such an annoying myth. People try to tell you that some trading bot can make you a whole lot of money while you sleep. Look, I'm not saying that trading bots, EAs, can't make you profit. They can. They definitely can. There is definitely some truth to it. Banks and massive managed funds, hedge funds, they have bots trading for them. But the truth is they spent hundreds of millions developing those bots. So some bot that you're picking up from some crappy website, sold for $99 a copy, written in MT4 code, is not going to have the same profits that those bank bots have. We're talking about whole different levels of thing. We're talking about whole different levels, vastly different levels. We're talking about down on the floor versus being at the top of a huge tower. That's the kind of different level we're talking about here when you're talking about trading bots. Now, I'm not saying that bots are useless. I'm not saying that. I know a lot of great traders who use bots, who use AI, and it really, really helps their trading. I think bots can be great. They can be a huge help. They can make you a more efficient trader, but they aren't a magical tool that is going to make you rich while you're asleep. Bots need to be monitored. They need to be adjusted regularly. Sometimes they need to be switched off and switched around for other bots, so they need to be turned off. And you need to use another bot that's better in that market, in those trading conditions. So when market conditions change, you might need to swap out your bots. They require, more importantly than anything, they require monitoring. They're not just like you turn this on and it's just going to trade for you automatically and you wake up and you're like, oh, I've made 10,000 today. That's great. That's just not how it works. That is fantasy. That is a dream that marketers trying to sell you in order to get your money. That's just how it works. Now, the last one we're going to talk about. I want to make all of my income from Forex. Look, you can make a living trading Forex, and you can make a really good living trading Forex. The majority of my income comes from trading. But relying on trading alone is not smart. And why isn't it smart? This isn't just Forex. This is any time you are self-employed. Anytime you are self-employed, you need multiple streams of income. Why? Because what happens when you get sick? What happens when you get hit by a bus? What do you do then? When you can't trade, the money stops. It stops coming in. Even if you're using bots, you can no longer monitor those bots if you're sick or if you just can't do it, then the money stops coming in. So as a trader, you always need multiple streams of income. And you also need backup. You need a backup. You need an emergency fund. This is one of the hardest things for people to understand. People say, I want to become a trader. And then you become a trader, but then what? You've got this awesome skill. You're trading and you're making profit. All right, not every single month is profitable, but that doesn't matter in the grand scheme of things, because if you're doing things right, you've got funds set aside for that crappy month. So that's all good. But people never really think about, okay, now that I'm a trader, or when I become a trader, what happens when I get sick? What happens when I can't trade? What happens when the markets are just really, really bad right now? What happens? What do? You need multiple streams of income. Any self-employed person knows this. Any person who's self-employed knows that they can't rely entirely on their business, because as soon as they get sick, there is no backup. Yes, you can get insurance for that. And if you want to become a trader, you should have income insurance. You can get insurance for that. There are things you can do, but the best thing you can do is not rely on insurance. It's to have multiple streams of income. So if you want to make all of your income from Forex, that's just not a realistic thing. It's just not. I'm sorry to say it's not. And you just need to think about it logically as to why. I've already explained it. And it's just I don't think it could even be logically argued against that you should be making all of your income from Forex trading, because the second you think about it, what happens when I can't trade? Physically, I can't trade. Mentally, I can't trade. What happens if I'm in the middle of a mental breakdown? What happens if my wife dies and I want to take 6 months off trading? Where's the money going to come from? That's just one of the realities of trading, guys. And you have to accept that. You have to understand that, and you need to have multiple streams of income for trading. It's very important. Yeah, you can have an emergency fund set aside. Of course, emergency funds are great. They are great. Everyone needs an emergency fund if you're going to be a trader. 6 months, good. 12 months, even better. But an emergency fund's there in case of emergency. You don't want to dip into that if you don't need to. So if you have multiple streams of income, then you don't really need to dip into your emergency fund unless it is truly an emergency. So anyway, one of the realities of trading is you can't rely on it completely for your full-time income. And that's not just Forex trading. That is any time you are self-employed. Any self-employment you have, you need multiple streams. Right. So those are some realities of trading, guys. And yeah, that does sound a little bit bleak. And I guess now that I've scared off all... JD Williamson is saying something great. Grow your capital, don't eat it. That's another really, really good point. You want to grow your capital. You don't want to keep withdrawing from your account. But anyway, I think we'll talk about that a little today. But we'll talk about that now a little bit later. Now that all the get rich quick crowd are gone, the people who want to get rich quick and who want to buy a mansion next year because they can't accept the reality of what trading is, now that those people are gone, let's talk about what you can actually do once you learn to trade. Because trading is a great skill to have, and it's an amazing skill to have, and it can make you a great, great living. So let's talk about the free paths. There's 3 main paths that you can take as a trader. Now, I'm sure there's probably more paths, but I'm just talking about the 3 main paths. What are the 3 main paths you can take as a trader? Path number 1 is make stupid money. Now, what do I mean by stupid money? I mean stupid amounts of money. You can do that as a trader. Now, before you say I'm selling dreams, just hold on, because I think most of you are going to agree with me that it's totally not worth the time or stress to make stupid amounts of money trading. But we'll get to that in a second. Now, what else can you do? You can make a good living. You can make a good living trading. This is the path I've chosen. Make a good living, make a great income, be happy, not worry about bills, not worry about all that kind of stuff, not have a boss, do what you want when you want. You can do that. Or you can use trading to grow your wealth. So that means you keep your full-time job, but you use it to grow your wealth. Kind of like people do when they invest in the UK, they're called ISAs, but they're called managed funds elsewhere. When they invest their money into places like Vanguard, where you get a return of 5, 10, 15% per year, depending on how good the fund is, index funds, stuff like that. But do the work yourself, do the trading yourself. That's growing your wealth. So let's talk about number 1, making stupid money. So if you want to make stupid amounts of money trading, that is a possibility. The way you do it, in my opinion, this is the path I've seen some people take. This is the path some people I know are on. They haven't really hit it yet. But there is a way to do it. It wasn't for me. I wasn't that interested in it. Number one, learn to trade. And when I say stupid money, by the way, I mean having a mansion and a helicopter. Stupid amounts of money. That's what I mean. Right, so number one, learn to trade. Get 1 year of results at a minimum. 1 year of good trading results. Recorded trading results. Approach prop firms. Now, if you don't know what prop firms are, they're basically private companies that hire traders to trade their money for them. So, you know, there's a lot of different reasons someone would open a prop firm, but let's say that I have like several $1 million and I want traders to trade it for me. I might open up a prop firm and have traders trade this money for me, blah, blah, blah. That's just a very basic example of what a prop firm is. Prop firms are usually open to hiring traders with not a huge trading record. They're also more open to hiring traders that don't have university degrees. So prop firms are generally the place to look if you want to get into trading other people's money, which is the path you would take when you want to make crazy amounts of money. Unless you're already a multi-millionaire and you have millions to trade of your own money, you want to be trading other people's money to make a lot of money. So once you've worked in a prop firm for a few years, you might want to try and upgrade to working for a managed fund or a hedge fund, if you can pull that off. This kind of stuff is all about who you know. It's about networking. It's about getting to know people in the industry. Finding jobs in managed funds is really tough. Generally, they're looking for university degrees, but if you have some years of experience in a prop firm, you could pull it off. If you know the right people, you could definitely pull it off. And basically work your way up into a managed fund and work in that managed fund. Managed fund traders make really good incomes. I think some of the lowest ones are around 200K per year, but then that's just the lowest ones. That's not stupid money. 200K per year is not stupid amounts of money. Once you work your way up, you can be on millions and millions per year. But before people say I'm selling dreams, there are a few things about this that are just not that great. High stress, crazy amounts of stress, lots of hours. You're working a lot of hours. You're constantly working. You're constantly studying financial markets. When you're not working, you're reading up on what's going on on the world economy. What's going on in the world? What's going on with just what's going on with everything. It's huge amounts of stress. And you also stand a good chance of getting stuck in the lower ranks. You know how I said the minimum you're making is 200,000? You also get a chance of getting stuck down in that kind of 200,000, 300,000, 400,000 bracket and never really moving up from there, because it's the exemplary traders that start moving up, and it's the ones who know how to network, the ones who know how to play, I guess the term is office politics, but it's not really office politics, but the ones who know networking, office politics, that kind of stuff, those are the ones that start moving up. Whereas if you're not good with that kind of stuff, you might get stuck in those kind of lower ranks. And then you're putting in loads and loads of crazy hours. You're in a high stress job and you're not making stupid money. Look, that's a path some people can take. It's not for everyone. It certainly wasn't for me. My idea of having a good life was never about working 10-hour days and killing myself just to make, enough money to buy a helicopter. I don't really care about that kind of stuff. So, you can do that with trading. Once you learn that skill, you can turn it into a lot of money if you want to take that path. I don't recommend it, but hey, everyone, you do you. If you want to do that, go for it. It's going to be tough. It's not easy. It's going to be tougher than the middle path that I took, certainly. It's going to be way tougher than that. Now, the other path you can take, like I said, middle path, the one that I took. This is the one I'm most qualified to talk about because this is what I do. Basically, this is making a good living from trading. This is probably, I'm biased, of course, but I would say this is the best way to trade. So first of all, what you need to do when you're taking this path is to build your trading capital. Now, you can do that in a lot of ways. You can do that slowly. That's how I did it. I did it slowly from where I started. I had a little help from my parents, not a lot, but they put in a few thousand when I was starting out. And I started slowly building that account. I was like 17, right? 16 when I first started, but when I started Forex, actual Forex, 16 I was doing stocks, but when I started actual Forex, I was 18. So I built up over, a long period. Now, if you're like in your 50s, you might not want to spend the next 10 years just building up. So even if you're in your 30s, you might not want to just start from here, spending a few years building up your capital. So what can you do? We're going to talk a little bit more about that later. But there are certain things you can do, like working for a prop fund. So how we're saying make stupid money. Well, you can use that. No, that one. Make stupid money. You can use that same kind of path, but just the start of it, working for a prop firm. That's a great way to make money when you're a skilled trader. You could work for a prop firm, you can make some good income from that, and you could use that to build your own trading capital, and then you can quit that job when you realize that the stress is just not worth it. Yeah, we're going to talk more about this path in a little bit. We're going to go into this path more in a little bit. But I think this path is the best, guys. I really do. I think it's the best because you can make more than enough money to live comfortably. You don't have to worry about bills. You don't have to worry about having a boss. I know a lot of people who are on this path. A lot of my trading friends, like for example, one guy that all of you might know, or most of you might know, Etienne Crete. He has a very popular Forex podcast. His thing is he loves to travel. He loves to travel and see the world. So what he does is he trades while he travels. So he picked this path, the make a good living path, because he makes a good living from trading. And he uses that to travel around the world. He's not traveling first class. He's not staying in 5-star hotels all the time. But he's making a great living and he has the freedom to do what he wants. So, that is the path that I personally think is the best. And yeah, Etienne. I was just wanted to see if people knew Etienne. Of course they do. He's got a huge Forex podcast. He's a great guy. He's an awesome guy. George has met him too, actually. But yeah, the reason I bring him up is he's a great example of someone who's taken that middle path of making a good living. He's not going after that stupid money. Now, look, I don't want to speak for him exactly. I'm just saying from what I've seen of him and what I know about him, and I know him. But this is just one example of a guy. There's loads of people that I know who have taken this path, and I think that's the best path to take. You can make a living trading Forex and you can make a good living and you can have financial freedom. You can have not pretty good, I would say a very good life, but it's all in what you want. If you're the kind of person who wants to live in a mansion and have a helicopter, taking this middle path might not be the best because then you're just trading your own money. And unless you're starting off with already a lot of capital, it might be hard to get to that level with your own money. But when you're working for a prop firm and you start getting money rolling in from that prop firm, and then you go up to a managed fund, then you're on a salary as well as making profits from what you trade, stuff like that. That's the path people who want to make stupid money can take. But I think the make a good living path is a lot better. Because yeah, I mean, my life is pretty good. I don't know if this is what everyone wants out of life, but my life is pretty good. I don't work a lot of hours. I work very few hours. I can travel whenever I want. So I have the freedom to travel whenever I want. When I go on holidays with friends, they always have to book days off work, call their boss to get days off work. And it's all this big thing, everyone trying to get the same days off work. Whereas for me, I'm just flexible. I'm like, oh, yeah, I can go on holiday whenever because I have that freedom. I don't have a boss. So that's why I think, that's one of the many reasons I think this is the best path to take. But again, it's up to you. Let's just talk about path number 3 real quick, because I think that's another... It's another important one because there's a lot of people who don't want to quit their job. They love having the security of a full-time job, or they just have a job that they love and they don't want to give it up. And that's completely fine. You can use trading if you're in that position to basically grow your wealth. So this basically means you keep your day job, you invest your money into you invest extra money you have into your trading account, and you trade on the side, keeping it very low risk, trading only a few hours per week. You're going to be making lower returns, of course, but this is much safer, much more stable, and it's very low stress. So, if you put your money in the bank, you're going to get some stupidly low amount of interest per year. You'll be lucky if they give you 1%. If you go to index funds, if you go to managed funds, Vanguard, for example, you're going to be making 5, maybe 10 in a really good year, maybe 15%, which is not very much. But if you're trading your own money and you know what you're doing, you can make a whole lot more than that. So wealth growing is another way. You keep your full-time job, or maybe you switch to a part-time job, and you trade your own money, and you basically grow your wealth. It's like a side thing. So you can do that. That's another option that you can take. So you need to decide which of these paths you want, and you need to aim for that. The hardest one by far is make stupid money. That's a tough one. It's possible, but I couldn't even guess. When I'm saying you need to pick these paths, I'm saying once you've got the skills of a trader, once you're a successful trader, you need to pick these paths. So I think the make stupid money path is the toughest to get into, the toughest to get right. Getting a job at a prop firm is really not that hard, but I mean going up from the prop firm into a hedge fund, going up from there, working your way up in the ranks of a hedge fund, that's tough, and that's a lot of hours of work, guys. Working for a prop firm isn't that bad. Working for a prop firm is actually pretty cushy these days. It's a good job to have. And that's an option that's open to a lot of traders. Working for a prop firm is great because you can do it from home. Not all prop firms do this, but a lot of prop firms allow you to work from home these days. You could do it from home. You could do it on your own time. You can essentially be your own boss, work for a prop firm. That's a great option for Forex traders who want to make a living trading but don't have a lot of capital yet. So if you don't have a huge amount of capital, but you have the skills, you can make that capital by working for a prop firm. So you're trading 100,000 of their money, and you're keeping 50, 60, 70% of the profit, whatever the deal is with that fund, with that prop firm rather. Different prop firms have different deals. Some even pay you a salary. But that's a great option for traders to build their capital. So you do that for a few years. If you want to take this middle path, make a good living, you do that for a few years, you build up your trading capital. Once you've got enough capital, boom, you start trading for yourself. Or you just keep the prop firm job because, like I said, it's basically the same as trading for yourself. You can even set it up so that whenever you take a trade on your account, it gets replicated to the prop firm's account. And, why not? A lot of people I know do that, and they're happy with that. So, working for a prop firm, you can do that on the middle path too, especially when you're first starting out. Is there prop firms in the US? Certainly. I already explained what a prop firm is, but I'm going to explain it again for those of you who missed it the first time I said it. Basically, a prop firm is a company that hires traders to trade their money. So a company that has millions hires a bunch of traders to trade their money. That's basically what a prop firm is. So a managed fund is a company that takes money from investors and has traders working for the company who trade that money from investors, whereas a prop firm, it doesn't have investors, it uses its own money. That's what a prop firm is. So, like I said, prop firms are a great place to work. I'm going to start having, because we're coming to the end of the webinar, so we're going to do a Q&A here. So I'm just quickly looking at the questions. One thing I wanted to talk about just before we end is making a living from trading and doing it the safe way. So for those of you who choose the middle path, I'm going to turn off my camera because it's in the way now. So for those of you who choose the middle path, guys, there are a few things that you need to think about. You need to set in place. Like I said, I've been doing this for years, so I know these things and I have them set in place. So I'm just kind of letting you in on the things you need to know. So number one is to have an emergency fund. Like I said earlier, 6 to 12 months. You could do 3 months, but 12 months is better. If you have an emergency fund that gets you through 12 months, that's going to be fantastic. That means once you get sick, once, a family member passes away. I know these are very morbid examples. I'm just saying it's things you need to think about. Ignoring them is not really smart. You have at least 12 months of emergency fund. That's fantastic. If you can pull that off, if you can put that money aside, awesome, do that. 6 months, not as good, but doable. 3 months, nowhere near as good, but it's okay if that's all you can manage. So putting that money aside into an emergency fund if you want to make a living from trading, very important. Get income insurance. It's hard to get income insurance as a trader, but you should be able to pull it off. You just gotta. I can't give insurance advice. I'm just saying it's possible. It's hard, but it is worth having. Definitely. Again, if you get sick, blah blah blah, it's good to have that income insurance. So don't invest all your capital with your broker. This is another really important one, guys. And it's one that people don't really think about, not investing all of your capital with your broker. Let's say, just in theory, to pick an easy number, right? You're a professional trader now, you have a large account. Let's say that account is, like I said, for an easy number, 100,000. You have 100,000 in your account. Now, do you need to keep all of that 100,000 with your broker? No. Why does your broker need to hold on to that 100,000 in order for you to trade? They don't. You can keep half of it with your broker. You can invest the other half elsewhere. You can invest that into a Vanguard fund, an ISA, anything that's going to give you 5-10% per year, like a steady 5-10%, pretty safe, not too much risk. You can invest that there. And then you trade that 50,000 you have with your broker as if it was 100,000. So you're still taking trades as if you had 100,000 with your broker, but 50,000 of that is sitting off in a fund somewhere, earning an additional 10% per year. Because why not? Why have it sitting with your broker? It's doing nothing for you if it's with your broker. As long as you do the maths and you're not going to get a margin call, then you're fine to have a portion of that off with a fund earning you even better interest. So don't put all your capital with your broker. Your capital can be doing so much more for you. Keep in your account the amount you need, and the rest goes somewhere else. And then you trade your Forex account as if it had all of that money in there. It's just some of that money sitting somewhere else. Make sense? Hopefully it does. That's something you need to do. That's something all professional traders do, right? Newbie traders have all of their money with their broker. Professional traders have only a bit of it with their broker. High level traders, they don't even have any money with their broker. Their broker just has a kind of promissory note type thing from the trader's bank. Anyway, we won't go into that. Point is, as soon as you can, split off some of that money, put it somewhere else where it's doing more for you than just sitting as dead money in your Forex account. Okay, because it doesn't need to be there. And the final one, like I said, have multiple streams of income. This is an important one. Now, this doesn't mean that there's lots of ways to have multiple streams of income as a trader. Like I said, one of them is working for a prop firm. You can work for a prop firm. You can teach your skill like I do. I have a Forex website. I sell courses, and they make me a great steady income And that's part of my strategy of having multiple streams of income. Have investments in, whatever you want, property, whatever works for you. I'm not going to give you investment advice, guys, but it's just setting up some multiple streams of income. That way, if you're not able to trade, you don't have to dip into your emergency fund right away. You still have money flowing in from other places. Get that sorted out as soon as you start trading. Very important. Right. So, it depends. First of all, we're going to switch over to Q&A. All right, guys. I promise that I'm going to share some tools with you guys. After this webinar, you're going to get access to my trading plan template and my trading journal template. So my trading plan template, trading plans are vital for traders to have. If you don't have a trading plan, you're doing things wrong. You need a trading plan. I'm going to be sharing with you my latest updated trading plan template. It's the same trading plan I use. You just need to fill it out and get a plan in place for your trading. Number two, I'm going to share my trading plan. My trading journal template. My trading journal template allows me to track all my trades. That way I can improve my trading. Trading journals are vital to have. They're very important. I'm going to be sharing that with you guys. That's going to help get you on the path to trading Forex for a living. Right, so Q&A, guys. Let's do a Q&A. In the US, you need a degree or experience to trade with a prop firm. First of all, US traders could trade with firms outside of the US. I don't know that much about US prop firms specifically, but I do know a lot of European prop firms that hire traders from the US and hire traders from Australia. I know people who have gotten jobs in prop firms with literally zero university degrees. All they had was verified trading results. They brought it to the prop firm. I know one guy, one of my best students, in fact, he joined my course in like 2014. A lot of you might, actually, I'm not going to say his name. I'm not sure if he'll be okay with that. But I can tell you what he did because you don't know his name. He had 1 year of verified results. He contacted hundreds of prop firms. He just sent emails to hundreds of prop firms. And I think maybe 2 or 3, I can't remember exactly how many, got back to him. So he put in a lot of effort to find a job at a prop firm. A lot of effort. Actually, I don't think it was a prop firm. I think for him it was a managed fund, not a prop firm. It doesn't really matter. It's the same basic process. He emailed hundreds and only a few got back to him. But one of the ones that got back to him, he accepted a job there. And it ended up being a great job. He no longer works there. He decided to leave that because he decided that trading other people's funds was not for him, too stressful, which is why I say that taking that stupid money path might be a bit too stressful for most people. One of the reasons I say that. I also dabbled in trading other people's funds a long time ago, and I lasted a few weeks before I was falling apart from the stress, and I just said, screw that. I'm going to trade my own money and never trade anyone else's money again. So, that's... some people are cool with it. Some people love trading other people's money. So you can get a job at a prop firm without a university degree. It's obviously going to be easier with a university degree. But hey, do what... this guy I was telling you about did. Send an application to, or not an application, sorry, an email to hundreds of prop firms. One of them is going to get back to you and they're going to say, oh, this looks interesting. You can work for us. Isn't it possible to make stupid amounts of money from your own account if you account for compounding interest of your capital after years of trading with prop firms? Trading without using prop firms. After years of trading without using prop firms. Yeah, sure. You can build up your Forex account until it has a lot of money over time. And you could potentially one day get to a point where you're making stupid amounts of money. It's important to understand when I say stupid amounts of money, I don't mean 2 million per year. I mean 20, 30 million per year. I mean like stupid amounts of money, like being in the top, I don't know, however many thousand richest people per year in the world, rather. I'm saying like having Ferraris, helicopters, mansions, and stuff like that. Sure, you could probably get there with your own money over the course of a long time, but yeah, it'd be a tough one. Yeah, I'm not talking about. No, 1 million per year isn't stupid money. 1 million per year is 1 million per year is a really good income. That's make a good living. That's that path. Make a good living. 1 million, 2 million, 3 million per year. That's the middle path I was talking about. Stupid money is like, you know, Jordan Belfort, whatever his name is, that dude, or you know, multi multi millionaires, like 10, 20 million per year. That's stupid money. I didn't give a good example of what stupid money means. I'm sorry. I probably should have like given a rough number there, but no, a few million per year is not stupid money. That's something a lot of people these days do. You know, there's a lot of people up there in that kind of range. Obviously, not most of the world, but a, a lot of people these days are making millions per year. That's making a good living. That's the living where you don't have to worry about anything. You can travel where you want. You can do whatever you want. 100K per year is realistic as a trader, of course. What is the minimum amount as? I don't really understand what you mean by that, man. Uh, the more money I've made in my life, I make a good living. The more money I've made in my life, the more I realize that once you've got your bills paid, once you don't have to worry about opening your mail because some bill is gonna draw too much money out of your account. Once you don't have to worry about the annoyance of having a boss. Once you don't have to worry about, just worry about things. When you've got enough money to stop worrying, that's I think that's in the end all you really need. At least that's what I realized. My goal when I was young was to be a billionaire. That's what I wanted. I wanted to be a billionaire. And as I got older, I just started realizing I started making good money, good money, good money, even more good money. And I had the potential to make even more. You know, I could have started working for a hedge fund. Uh, well, I mean, I never took that path. I'm not saying I had offers from hedge funds. I'm saying I could have aggressively pursued that path, and might have ended up, I might have ended up there. But then I just realized at some point, hey, I've got enough money. I'm happy. I literally can. This is not me bragging. I'm just telling you the reality of my situation. I can travel whenever I want. Uh, I don't have to inform anyone that I'm traveling. I can just pick up and go. My biggest worry when I'm traveling is I have cats and I need someone to take care of my cats. That's the biggest concern. Otherwise, I could literally pick up and go to France tonight and wake up in France tomorrow and do whatever I want if I could get a ticket. But I have to worry about the cats, which is annoying. Uh, so I can travel whenever I want. I don't have a boss. I never worry about bills. I never really worry about, if I go to a restaurant, I don't look at the prices on the menu. I just order what I want from the menu. To me, that's a good life. But that's my good life. That's what I think a good life is. It's not what you think a good life is. Maybe for some of you, that's what you think a good life is, and great. For some people, a good life is having, 5 Ferraris in the garage. And if that's your good life, then you can aim for that. But for me, it was just I got to a point where it was like I have enough money, and I can make way more money if I work a lot harder, but then my life becomes about work. And I just didn't really want that. I just wanted to be able to do what I want when I want. So, yeah, that's me. No, that SPX trade didn't fail horribly. I got out of that trade with some profit. Uh, got out of that trade way before it moved. First of all, it didn't hit the stop loss that was set. Well, it depends if you moved your stop loss to break even. But as I was saying in my analysis, you should have. Well, I mean, I said in my analysis, everyone does what they want, but I don't want to hold through the G20 meetings. So I got out before those G20 meetings. Learn English today is 20% per month realistic. As I said at the start of the webinar, there's nothing per month is not realistic. Just the term per month is not realistic because your profits are going to fluctuate month to month. So some months you might make 20%, some months you might make 5%. If you're talking about averaging 20% per month, sure, you can do that. That's possible in trading. You can average 20% per month. You're going to need to probably do, my guess would be at least 2 hours per day of trading. You're going to need to do some day trading if you want to be making 20% per month. And maybe some swing trading on the side. The approach I would recommend if you want to make, this is per month on average, so averaged out over the year. Some months you're making 10, some months you're making 50, some months you're losing 20, averaged out 20%. What I would probably recommend would be to do a mix of day trading and swing trading. So have swing trades that are open for several weeks in a row, have day trading, and then the money you're making day trading basically feeds into the swing trades, and it's a pretty effective way of hitting those kind of higher percentages because those swing trades are constantly generating income. You're going to have pretty high risk relative to what most traders recommend. So if a trader's recommending, the general thing that people hear is 1% risk. 1% risk does make sense, but if you're aiming for that 20% per month, you're going to want to be risking, in my opinion, 2-3% on those swing trades. And you have those swing trades running on the background. And then on your day trading, that's where you're risking 1% per trade or less. Yeah, it's you can do it. 20% per month, averaged out per month, is possible. I know a professional trader. Well, I don't know him personally, but I know of a professional trader. His name is Charlie Burton. He's not Forex only. He trades a variety of things. He did a challenge, a public challenge, where he traded from 1,000 to 10,000 in 2 years. So he was certainly making more than 20% per month if he was doing 1,000 to 20,000 in 2 years. Sorry, 1,000 to 10,000 in 2 years. And no, sorry. The challenge was 10,000 to 100,000 in 2 years. And now he's in the middle of a challenge where he's doing 50,000 to 500,000 in, I don't know how far. I can't remember how far into that one he is. You should check him out, Charlie Burton. So, there's a guy that's doing, averaging more than 20% per month. So it is doable. But yeah, he's doing what I was saying, actually. He's doing a mix of day trading and swing trading. On his swing trades, his risk is much higher. Yeah, so that, totally possible. If you don't mind sharing with us, how much was your initial Forex trading capital and how long did it take for you to grow your first trading account? My first ever account, if I remember correctly, it was a long time ago, so I don't exactly remember the numbers. I think it was about 1,200 Aussie dollars, this is my first Forex account. This is going back to Forex, which I lost all of that. So I completely blew that account. I think I then had another account which was roughly in that 1,000 area. I blew that account. Uh, when I started actually like making some consistent profit, I think I started with something like 2,000 Aussie dollars. I was still living in Australia at the time. I think I started somewhere in the range of 2,000 Aussie dollars. I then made consistent profit for under a year. My parents put in about 10,000 from their savings when they saw that I was making good returns. And I traded their money, and I didn't lose that. That was kind of when it started going well for me. So I got a little bit of a boost from my parents. Keep in mind, I was a kid. I was 18 years old. So, yeah, I still lived with my parents. Okay, I'm on really variable work shifts. Sometimes 7 days a week work, and sometimes just 2 days. Could I day trade in these weeks or stick with swing trading? You can definitely day trade. If you learn to day trade, you could day trade around your job. The question becomes, do you want to day trade around your job, or do you want to have that time off? If you find that you want to day trade, if you find that you're enjoying it, then definitely you can day trade around your job. There's definitely no problem with that. Uh, G5988. Damn, is it that easy to lose? Yeah, if you're a complete idiot. And I don't mean that in a rude way. I mean that I was an idiot and I was risking ridiculous amounts per trade. I wasn't trading, I was gambling. I was I had no idea what trades I was taking. I was just doing whatever looked good. Uh, I I was moving my stop losses. I think the first account I blew, I just kept moving my stop loss further and further up, thinking it's going to turn around, it's going to turn around. Classic mistake. And eventually I got a margin call. The first margin call I got, I didn't even know what a margin call was. I didn't even know they existed. I called my broker angry, saying, uh, uh, why is my account being closed? And my broker said, you've had a margin call. And I'm like, what's a margin call? This is ridiculous. Like some 18-year-old kid on the phone infuriated because he took a dumb trade, kept moving his stop loss, and got margin called. It is easy to lose money if you're an idiot. And I was an idiot. Now I'm not. Well, that's a bold claim to make that I'm not an idiot, but I think that these days I'm a little wiser than I used to be. Do I have a recommended? Uh, yeah, Liz V is saying depends who you ask about me being an idiot. Liz V is my partner, by the way, so she's rude. Uh, do you have a recommended strategy for how to present your trading results to a non-trader to convince them to let you trade their money? I'm sorry, I don't. That's not something I've done. I don't like trading over people's money. Send me an email. I'll ask on my forum, and I'll have a look and see if anyone does have a recommended strategy. Learn the psychology of the market, or learn as much as possible the chart patterns indicators. I'm not sure what you mean by the psychology of the market. If you mean your own trading psychology, then I would argue that trading psychology is vastly more important than trading strategy, because it doesn't matter how good of a trading strategy you have if your trading psychology sucks, you're going to lose money because you're going to exit trades too early. You're just going to make a whole load of mistakes. So trading psychology is vital to have. In fact, that's one of the main this upcoming podcast I have. That's one of the main topics I'm going to discuss: trading psychology. If you could go back to the first year of trading, what would you change in relation to how you made it your job? I don't fully understand the question. What do you mean, what would I change in relation to how I made it my job? Like, what would I have done different? I think that's what you mean, basically. What would I have done different? Uh, I would have put together a trading journal way quicker. I think that's the biggest mistake I made early on. I ignored the importance of a trading journal and tracking my results. I wasn't tracking results at all, and I just kind of was winging it the whole way. I didn't even have a proper trading plan, and I would always say to myself, I'm not the kind of guy that needs a plan. And that attitude, it was stupid, and it was I was overconfident because I was making profit. But the thing was, this was around 2008. 2008, 2009 were insanely good years for Forex trading. Insanely good years. The markets were moving like crazy. It was so easy to make money. So I got really, really overconfident, and I thought I was. Wait, was it, or was it 2007? Shit, I can't remember. Um, I'm going back on my charts because I want to. Just let me look at my charts real quick to get an idea of when this was. Right, so yeah, 2008. Well, I was already a fair way into my trading career though, so I can't really say that was at the start of my trading career. But for the first pretty much 5 years, I traded without a plan and without a trading journal. And I think it was my biggest mistake because I could have been doing a whole lot better. I could have been doing a whole lot better. I was doing good, but I was making a lot of mistakes that I didn't realize I was making because I didn't have a trading journal. And without a trading journal, I wasn't able to spot my mistakes. This is why I always tell people, get a trading journal, sort out your trading journal. And there's so many people that are too lazy to fill out their trading journal. And those people, I think, are people that are, in the end, never going to be, I won't say they're never going to be successful traders, but they're never going to be as successful as they can be. And I know this because that was the first 4 to 5 years of my trading, was not having a trading journal and not being as successful as I could have been, because I wasn't looking at my results and analyzing them and figuring out what I was doing right, what I was doing wrong. I'm going to share my trading journal template with you guys. It's just an Excel spreadsheet. It's not like a Dear Journal. It's not that kind of journal. Trade tracker, if you want to call it. Do I recommend Expert Advisors or MQL5? I don't use any myself, but I am going to start using some trading AI. I'm going to start using some trading AI in the future to make my trading more efficient, let's say. It won't do all the work for me, but it will help. That's important. Daniel Gomez, do you have any books to recommend about price action and psychology? Must read books. Yes, but I don't want to spoil my upcoming podcast, so I'm going to keep them for the podcast. I'm sorry to say. Yeah, it's robots trading AI, trading bots. Exactly, JD. It's not that kind of journal. Completely different kind of journal. It's a trading spreadsheet that basically allows you to track your trades and stuff. Who retracted your message? Did you retract it or did George retract it? There was no need to retract that one, George. Ah, right. But yeah, it's not that kind of journal. Trello, I love Trello. Trello has its uses, but it's not a good trading journal software. The importance of trading journal software is you need to be able to extract data from it. You need to be able to extract data from it, and you need to be able to look at. You need to be able to easily extract data from it. The best way to do that right now is Excel or Google Sheets. The best way to do that in future is going to be through a trading journal software I'm building, which is all going to be web-based and has a smartphone app. But that's going to be a while off. Real Flight Sim, do I have any advice or tips for you besides using a trading journal and having a trading plan? Which you must have an Excel trading journal, not a paper trading journal. Besides that, real trading is going to be a lot harder than demo trading. Psychologically, unless you're a psychopath with no emotions, you're going to struggle more. You're going to have bad weeks. You're going to have bad weeks. It might not be your first weeks. You might have some great weeks starting out. That's going to be awesome. Awesome. If you have great weeks starting out, don't let it get to your head. Don't get cocky. Don't get overconfident. Stick to your risk. Whatever risk you set out, stick to your plan, because overconfidence is a real killer. Once you get that surge of overconfidence, you're going to start getting cocky and making mistakes. Don't do that. Don't let that happen. Follow your plan. If instead it goes the other way and your first few weeks are going to be losses, or you're not doing as well as you're expecting, don't change your strategy. Don't change your strategy. This is a common mistake that all traders make. They have some crappy weeks and they're like, oh, what can I change in my strategy to improve it? Just keep trading. There are crappy weeks sometimes. And once you have crappy weeks, you just got to keep trading through those crappy weeks, and then you end up having good weeks. So your strategy's been working on demo. If it's been working on demo, awesome. Just keep trading it. Your first few weeks might be great. They might be better than you expected, or they might be worse than you expected. Whatever you do, just keep trading. Get at least a few months in without changing your strategy, recording it in your trading journal, then assess the results and look at where you're at and look at where you can improve. The difference between demo and live, is it entirely psychological or is it something else? It's entirely psychological. There is some difference in execution depending on the broker you're trading with. Some brokers, especially dishonest brokers, are going to give a false representation of spreads and execution speed on their demo platforms. Whereas when you switch to live, you're going to get a lot more slippage and you're going to get bigger spreads, which eats into your profit. But if you're with like a legitimate broker, like a regulated broker like Pepperstone, Oanda, uh, a big regulated broker, then, the difference is entirely psychological. I'm going to be sharing my trading journal after this webinar. Preferred broker. Everyone asks me this. There's no such thing as a preferred broker. My broker might not be good for you. First of all, my broker might not accept people from your country because they might have limitations on what countries they accept. A lot of brokers don't accept US clients. Are you in the US? If you are, you're not going to get, my broker is not going to deal with you. There's no such thing as preferred brokers. Brokers are unique to, well, not unique, but every trader has their own best broker. What broker suits their specific situation. So if you want a broker recommendation, send me an email. I'll ask you a few questions about your situation. And once you answer those questions, I'll have a bit of an idea of what broker I could recommend to you. But I can't just recommend a coverall broker that works for everyone, because there's different brokers for different people. Some brokers like Scandinavian Capital Markets, which is I'm finding to be a very, very good and solid broker, but they only accept clients that have 10,000 minimum account size. So is that broker going to be good for everyone? No, because if you don't have 10,000, you're not going to be able to trade with that broker. So if I said to you, my preferred broker is Scandinavian Capital Markets, then you went over to Scandinavian Capital Markets website, try to open an account, and you see minimum account size 10,000, you'll be like, well, this broker sucks. So there's no way I can tell you my preferred broker, because it just depends on you. Email me and I'll get to your email and I'll help you out. The biggest thing about brokers, IPS Warrior Fan 186 is saying, is spreads, and are they regulated? The biggest thing is, are they regulated? Spreads can be super misleading, because if you go to a broker's website, they're going to say to you 0.1 pip spreads, but it's a variable spread. So 0.1 pip spread, but the spread is going to be 6 pips for like a few hours of the day at maybe your peak trading times. So it's not really 0.1 pips to you, because the times you're trading, they've upped the spread for, whatever reason. So yeah, spreads are a big thing because they are going to eat into your profit, but you really need to test the broker in the end and see if, don't get fooled into what they say on their website about their spreads, because usually the spread's variable and it might not be the best for you. How about Cyprus brokers? I don't like brokers that are regulated in Cyprus. I want brokers regulated in in a country that has real financial regulations. And I want brokers regulated in a country that has insurance against the broker going bankrupt. If you trade with a broker in the UK, you're insured for, 50,000 by the Financial Services Compensation Scheme. If you trade with a broker in Sweden, which is why I like Scandinavian Capital Markets, you're insured for up to 100,000 euro. So Scandinavian Capital Markets goes bust, Sweden's going to give you some money, or all your money back. There you go, 1 million in Canada. So yeah, Cyprus, if a broker goes bankrupt, Cyprus is not going to give you money back. So yeah, I don't like Cyprus brokers. Beautiful country, but I'm not going to trade with a broker that's based in Cyprus. See you later, Kathy. Right, guys, I think I'm going to go too. I'm going to wrap this one up. Ended up being an interesting webinar. a lot of angry people towards the start when I started revealing some realities about Forex. Toast Cat was quite pissy. Don't know what his problem was. But I just wanted to be honest, guys, because like I said, there's a lot of people who are out there selling dreams and telling you that you can open up an account with £100 and turn it into 100,000 in a year, and then the next year you're gonna be like chilling out in your spa, in your mansion, with all these cars in the garage and taking helicopters from London to Paris and all this kind of crap. And there's a lot of people out there on YouTube selling that dream. And you know what they do? They use the money they make selling courses, which is a good income. I should know. I sell courses too. But they use the money they make selling courses to hire Ferraris, hire expensive sport cars, charter helicopter flights. Is it called chartering a helicopter? I think it is. Charter helicopter flights, and then give you the impression that this is their everyday life and that it could be your everyday life. But the reality is, the traders who are making that kind of money from Forex trading, or from just trading in general, traders who are working in funds and who are trading vast sums of money and who are trading hours and hours per day and who are in a highly stressful job, who are going to die of a heart attack when they're 40 because of the stress involved in their job. I'm exaggerating a bit here, but I just wanted to be honest with you guys and tell you the truth about what this business is. It's a great business to be in. It's an awesome business to be in. But, you know, you're not going to be making 100 million per year when you start out with 1,000 this year, right? It's just not, that's just not how it all works. So, maybe the truth hurts is how I'm going to end this webinar, by saying the truth hurts to some people. But to those of you who stuck around, you guys, I feel, are the realistic ones, the smart ones, and the ones that actually have a chance to make it in Forex, because you're not going in with these stupid expectations that you're going to turn 1,000 into 10 million in a few years. You're going in with realistic expectations, and you know what this industry really is, and you know that it can be really good for you if you actually learn to trade. So yeah, living in $1 million home is real. You could achieve that with trading, of course, but I think you guys understand what I'm saying. Sonia, you lost 100K. I'm really sorry to hear that. If you need any help with your trading, send me a quick email. I hate hearing people that lost stupid amounts of money. It kind of gets to me, because the internet marketers who kind of like sell those dreams, they don't really care about what effect that's going to have in the end. They just care about getting their payday from each and every person, and they're not really worried about what's going to happen to that person when they start putting real money into the markets. All right, cool. But yeah, anyway, guys, I'm going to wrap this webinar up. Thank you guys for attending, and it was really fun. The truth hurts, but hey, I told you guys the truth, and I hope you enjoyed it. I'm going to see you for the next webinar, which is going to be around about this time next month. If you guys have any questions, feel free to email me. I'm always happy to answer questions. Depends how many emails I get. Sometimes if you're asking me questions that are too in-depth, I might say, sorry, I don't have time to get into that much depth. But if you have some simple questions, or if you have some complex questions, feel free to ask. I'll do my best to answer them, guys. I just get a lot of emails, so sometimes I can't answer everyone. But yeah, thank you guys, and I'll it's on the website. Just use the contact form on the website. It's easiest. But also NickFX. I'll just put it in. There you go. Yeah, so that's it, guys. Thank you for attending, and I'll see you guys around.